Hello, everyone, and welcome to episode 1 of 2026 CRT Mentorship. In this mentorship, we will start from the very basics and slowly move to the intermediate and advanced level. CRT is one of the most misunderstood concepts on the internet right now, not because the concept itself is complicated, but because people online, the gurus out there, has distorted it, throwing around random terms and their own twisted and end up confusing everyone. But what we are going to do here now is very, very different. I'm going to break down CRT in a way that you are going to understand it within a time frame. Now, what is candle range theory? Candle range theory is known as CRT. And what is CRT? CRT is the simple way of using a candle to predict another price and also where price is going to go. Every candle has a high and which is the highest price, and every candle has a low which is the lowest price. This is how it started, and this is how the foundation begins. These 2 points create the candle's range. Yeah, the high of the candle and the low of the candle. This is called the candle range. Candle range high and candle range low. And every candle that you see in the chart is a range. Every candle is a time-based range. So the moment you understand it, the moment it's going to be clear to you. I'm going to dive into the chart and show you guys more example. Now, looking at this, we have CRT teaches us to watch what price does around the range. Simple idea is because price takes one side of the candle range and then move toward the other side. So for example, if price takes the high of the candle, we watch to see if it will reverse and move toward the low. So candle range is simply when price targets the high of a particular candle, then closed inside the range. This shows that it is a candle range. And the moment price took out or take out a high of a particular range, it is going to target a particular candle range low or high. This is why I illustrated this for you to understand this. Now, looking at this diagram, we have types of CRT. We have bullish CRT, and on my right hand side is the bearish CRT. Now, what is the bullish CRT? The bullish CRT is a scenario whereby price goes below the candle by clearing the low, then reverse and move up. This is very easy to remember when you go into the chart. And on the bearish side, a bearish CRT is when price goes above and clear a high and reverse and probably move down immediately. So these are easy to remember. It's just clearing the high and going lower. Now, this is the second one, which is also showing that price is bullish. From here, I created this diagram to elaborate more on the bullish expansion. So this particular bullish diagram is showing when the liquidity swept. Price came and swept the low of the first candle, closed inside the range. And this is showing us that we have higher prices, that price is going to target the candle range high. The same thing is applicable for the bearish CRT, whereby price take out the high of the range candle and immediately reverse to the candle range low. So the liquidity is swept, but the candle closed bearish, showing sellers have taken control of the market. Now we have forms of CRT. We have the classic CRT, we have the two candle CRT, and also we have the multiple candle CRT. I'm going to go into the chart now and break this down. But before I do that, let me break down how the form of CRT works and what forms of CRT we have. Now we have a classic CRT. What is the classic CRT? Classic CRT is simply the CRT that form with three candles, whereby the first candle is the range, the second candle comes as a manipulation candle. It clears the low of the range, and the third candle comes as the expansion candle that targets the candle range high or the candle range low. This is how this candle behave. It forms with three candles, showing you the accumulation, the manipulation, and also the distribution phase. Now, for the two candle CRT, this candle CRT has its own work differently. The first candle acts as a range, while the second candle does the work of the manipulation and the distribution phase. So when the range is formed, the second candle is going to clear the high of a candle or the low of a candle, creating the liquidity sweep or purge. And also that same candle is going to form as a distribution candle and then target the candle range low. This is how this candle behave. Now, this candle also is seen when we have high impact news like the NFP, FOMC, and all the high impact news, CPI, that could move price fast with a large momentum without a blink of an eye. Now, looking at the third form of CRT, we have the multiple candle CRT, which is when price form the candle range. Then inside the candle range, we have like about two to three candle that will also be ranging before the candle, a particular candle is going to clear the range low, then target the range high. The same thing is applicable for a bearish CRT also. Well, the difference between the multiple CRT and these two other CRT is that after the range is formed, we have like multiple CRT that forms a range. Yeah, two to three candle can form a range before we have the manipulation candle. So this is the difference between multiple candle CRT and two candle CRT. I'm going to dive into the chart and show you example of trades I took and how to trade them. So this is another important thing to understand when trading CRT. Now, CRT has a high probability of working when it forms at a key level because the key level provides additional confirmation for the setup. So when you trade CRT on a key level, is more important than taking any random trade. Key level plus CRT equals to high probability trade setup. So we have different type of key level I use when trading CRT. The first one is the old high and the old low, which is also known as the buy side liquidity and sell side liquidity. Around this area are resting liquidities. That is why we use those areas to anticipate a CRT formation. So the second CRT key level is the FVG. FVG is simply an imbalance where price react and also whereby higher institution start taking their order from. And we also have the order block. Order block is also important when trading as a key level. We also have mitigation block, and also number 5, we also have the breaker block. So these are key levels price uses to um price uses when CRT is about to form. A CRT that forms on a key level is very, very important. Now, this is an example of a candle range theory that formed on a key level. Now, this is a classic CRT that I stated earlier. This is a three candle CRT formation. You can see how price formed the range. The first candle was the range, then the second candle came as a manipulation candle. After clearing this liquidity, it swept it and closed inside the range, tapping into our FVG, which is a key level. And this is also a key point here. Now, the third candle came after the liquidity has been swept, then distribute, targeting the candle range high. This is how to trade CRT with key level. When you see the third candle, pay close attention. This is usually the candle that gives you the entry after the CRT setup has been confirmed. The third candle is where we look for our execution without wasting time. Now, after the candle has been traded, after the CRT and also the key level has been tapped, we are going to then look for our confirmation. By my right hand side, we have the CRT confirmation here. We move down to the lower time frame. I'm going to teach you guys on my next episode or other episode to come, time frame alignment and which time frame to use as a higher time frame and also the lower time frame for confirmation. So this is how price tapped into the key level immediately, created a change in the state of delivery, then delivered to the candle range high. So let's go into the chart as I show you guys how and where to expect CRT to form. Now, looking at this chart, this is Euro USD. This is Euro USD. And for my first example here is a particular trade I took. And this trade was a classic CRT. It is a three candle CRT that forms on a key level. That is why I told you guys that CRT that formed on a key level is very, very important. It's better you take a trade on a key level than taking a trade and lose the trade. So this is a classic CRT that forms on a key level. Looking at this trade, we have the first candle as our range. Then the second candle came, swept the high of this candle. This is what we call liquidity purge or liquidity sweep. Then price swept it, traded into a key level, which is an order block. Then the third candle opened, displaced, then distributes immediately. So you can see how price left from the candle range high after clearing liquidity, then targets the candle range low. I'm not teaching about confirmation now. I will teach that in my other video, but for now, I want to let you guys understand how to trade and how to see CRT and where they form on the higher time frame. So another example is the two classic CRT. Now, the two classic CRT is a CRT that form sometimes, mostly during news, mostly during high impact news such as NFP, CPI, FOMC, interest rates. So these news make this kind of CRT to move fast in a particular direction. So this trade, I still remember this trade was during NFP. Price created a range, and the second candle cleared the high of the first candle, traded into a rejection block. Remember, rejection block is one of my key level, and it is very powerful to take trade from there. So price cleared the high of the first candle, targeted the rejection block, and you can see how price distributed immediately from that rejection block. You can see that price tapped into the rejection block, then distributes immediately, targeting the candle range low. So this is how price moved from swing high to targeting swing low. Let's see more example. So another example is here. We have the third example whereby price is in a bullish direction. The order flow is bullish. I could remember vividly that I took this trade. This is a bullish market because price was breaking above highs and rejecting below lows. This is a break of structure. Price went all the way up, then came back down, trading into a discount level. So if you use a Fibonacci and measure from the swing high to the swing low to the swing high, you see that price traded into the premium area of this price. So on the discount area rather, price traded into the discount area, not the premium. So the moment price traded into the discount area, you can see that we have an order block, which is the key level. So we must anticipate to take this trade on a key level. Now, this is the order block that formed, which is a strong key level after the break of structure. Now, what happened? Price came back, created the first candle, which is the range. The first candle failed to trade into our key level, which is the order block. Now, what happened? The second candle came, took out the low of the first candle, tapped into the order block, which is the key level. Immediately, it closed inside the range and target the high of the candle, which is the candle range high. So this is the two classic CRT. This candle moves only with two candles, whereby the first candle is the range, then the second candle act as the manipulation candle and also the distribution candle. Price even targeted the draw on liquidity above here. This is to show you that CRT is very, very powerful. It is not like SMC whereby you'll be waiting for a particular price pattern to form, you wait for a market structure shift without context. All these things are not powerful. So CRT shows us what price does. Remember, price moves because of liquidity, and we have accumulation, manipulation, and distribution. This is simply what CRT actually does. So in my next video, I'm going to be teaching you guys how to take trade using CRT, and also the confirmation that I use to take trade using CRT, so that it is going to benefit each and every one of us. So that's it for the first episode. We covered the foundation and basics understanding of CRT. And trust me, the moment you understand this, the clearer and understandable the market becomes. I will see you guys in the second episode. Thank you guys, and peace out.